Hi everyone, I'm really sorry for the delay. It's just the rains that have kept us. Yes, it was last year as well. Thank you for being here as we unveil Marcellus India Wealth Survey 2025 in collaboration with Dun Bradstreet. This is more than just a report, it's a deep dive into how India thinks about wealth, savings, trust, and investment decision. Up next, we'll share key insights and hear from the leaders. So, over to you.
Can you hear me now? Aji. So I'm glad there's only 10 of us in this room, right, to discuss this because this survey has been one of the most exciting surveys I've seen for a long time, right? My colleague Manish is our chief operating officer. Idea inka tha, right? But you'll see why this is actually quite a watershed. For many years, right, since I wrote Coffee Can Investing 2017, 2018 mein, since I wrote Coffee Can Investing, I've had this sense that something is not quite right in the HNI savings ecosystem, right? But वो एक sense of unease था that there's something not quite right in the HNI savings ecosystem, but we were never able to pinpoint the problem. Naturally, unless you do scientific research, you can't just wake up one morning and figure out what's wrong with the HNI ecosystem. So, the slide is here. Yeah. So Manish is going to go into the survey results, but we thought we will help you visualize the survey results through a archetypical HNI family, right? Now you'll say rightfully that there is no archetypical HNI family, and I agree with you. But if you want to visualize in one snapshot what's going on in upper middle class India and why people need a lot of help, the Kumars in Kandivali, right? Kumars in Kandivali name has been judiciously chosen. Will give you a sense of what's going on, right? So this is a three-member family, husband, wife, both working, right? Good jobs, bank, insurance, BFSI ke log. The family is taking home 50 lakhs net of tax, right? Remember the average income tax payer in India, average income tax payer ka gross income hai 10.5 lakhs as per Government of India data. So therefore a family earning 50 lakhs net is 7x richer on a post-tax basis, 7x richer in terms of annual income, right? So this is HNI in any sense of the word. However, even if you earn 50 lakhs in suburban Mumbai, you can see how the expenses add up. Home loan, EMI, car loan EMI 4 lakh is actually not a lot in modern context. As a father of two kids who go to IB schools, I can testify to that 8 lakhs, right? Thankfully, my son just finished class 12 last week, so ek kharcha kam hua, right? But after you pay for all of that, the Kumars, after doing prestigious jobs in BFSI, are saving a mere 5 lakhs per annum, right? I stress again, this is from the survey results. Manish will give you the granularity. This is not atypical. Affluent families in India are not being able to save a great deal of money, right? And remember, the Kumars are 7x the typical income taxpayer. फिर भी उनकी साल में बचत is a mere 5 lakhs, right? 10% savings rate. Now, that's the P&L. Let's go to the balance sheet. Kumar's के balance sheet में assets हैं 3.5 crores of assets, but that 3.5 crores flatters to deceive. Why does it flatter to deceive? Because the majority of that is real estate, right? Real estate over a 10-20 year cycle hasn't been a big compounder. It's also illiquid and it's also tax unfriendly. That real estate is not just the primary residence of the Kumars, which you could argue we should knock off, but in the purposes of keeping it simple, हमने primary residence डाल दिया है. It also includes an investment property in the city of Pune, which is worth 75 lakhs here. They thankfully have an equity allocation, but another modern day obsession in India, the equity allocation is disproportionately heavy on small caps, right? ये और एक deadly problem बन गया है, disproportionately heavy. So एक तो ये real estate है, illiquid, tax unfriendly. Then you have small caps, illiquid, thankfully tax friendly. And then, and we're increasingly seeing this in high net worth families, ESOPs. Now, ESOPs are also illiquid. ESOPs are also, as I have discovered, tax unfriendly, right? If somebody in position of power is watching, please make ESOPs more tax friendly. Every startup की demand है. Result of all of that is the 3.5 crores, even though sounds like a lot of money, in practical terms, it's not compounding at a good rate. And then the result of all that is aspirations, the Kumar's aspirations. At one level, these are typical aspirations, but as we'll discuss as we go on, many of these aspirations are very unique to India. In no other country that I've lived in do parents save for the bacha ka marriage. But in our country, that's routine, right? The Kumars want a new car in 2027. They want to send their daughter abroad for education. That's going to cost around 2 to 4 crores. They want to save for her marriage, and they also want to retire at age 60 with 18 lakhs ka income, right? What when I began this journey, when I started writing Coffee Can Investing, I didn't know, and I'm very grateful to Manish for doing the survey, that I now know is, are these aspirations realistic for the Kumars? Uska kabhi scientific response answer nahi tha, right? Manish Hemnani, our chief operating officer, has managed to quantify the answer. To figure out how Manish did so, I'll request him to explain how he did the survey, and then we'll get into the guts of the results.
Yeah, hi. So we essentially try to understand, again, this is an archetype, but this is the typical HNI investor that, again, we sort of serve. We wanted to understand whether what we are seeing is also applicable at a wider stage. So we commissioned this survey. It started with let me just brief on the construct, right? So we did this in collaboration with Dun Bradstreet. This was done in February and March this year, so it's pretty recent. We had 465 respondents, and these are across from metros, tier 1 and 2 cities. So there's a fair spread of HNIs, and it covers a wide geographical sort of landscape as well. And we focused on anyone who is age greater than 30 and have an income, post-tax income of more than 20 lakhs, which helps you enough to save and accumulate over time. And so that was the structure. We ran it over 2 months, and in collaboration with Dun Bradstreet. And this is the synthesis of what we found, right? So there are three broad trends that are coming out of this survey. So despite a record-breaking bull run, right, the last 5 years was a fantastic bull run across where all of us would have, everyone would have made fair bit of money. HNIs are still remain frustrated with three key things, right? The first one is their ability to achieve their goals. Second is they lack a coherent financial roadmap which can help them get to their goals. And the third thing which is clearly coming out is they need a trusted advisor, a guide who can not just get them started here and now, but take them through the journey all the way, right? And so these are the three outcomes that we saw, and we'll dig a bit more detail into each of these as we go. Right. So the first big finding is HNIs are not saving enough. Right, HNIs by the definition are high net worth. They have done enough, worked hard to accumulate.
Folks, remember this finding is coming at a time when the RBI has pointed out that net household financial savings were at a 50-year low last year. It's ticked up a little bit, but net household financial savings, as per the RBI itself, are close to 50-year lows, right? And therefore, in that context, this finding shouldn't surprise us. It stunned me initially, but then when I contextualized it, I said, well, this is very consistent with the RBI saying that households simply are not saving enough in our country.
Yeah. So that's the first one. And where it comes from is that 43%, 4 in 10, are essentially saving less than 20% of their net of tax income coming into it, right? So 9% save around 10, less than 10%.
Yeah. Okay, carry on.
Okay, yeah. So 4 in 10 save less than 20%. And when actually you look at the younger folks, so aged between 30 and 45, which are in the build phase, right, it's around half. 50% of them are saving less than 20%.
So this is your typical viewer or reader. Half of Indians at the prime of their lives, half of affluent Indians and the prime of their lives are saving less than 20% of their post-tax income, right? If I will share this with the powers that be at the RBI. So if the RBI needed granularity on why net household financial savings rate is so low in our country, it's because young Indians at the prime of their lives are not being able to set aside enough money. And this is not us saying it. This is the survey telling us. Go on.
Yeah. And the next one is on the other side. What we see is 4 in 10 have at least one open loan. Most of the bulk of this is home loan. So they have a house and they are servicing that loan. But 4 in 10 have an open loan, which essentially also erodes into the savings. So that's the first key highlight. And we ask the question in their own, so what are the challenges that they are facing in achieving their goals. 40%, big number. 40% say they're not satisfied with the investment return that they're achieving. So they 40% believe the low investment return is the biggest hindrance in them able to achieve their goals. And again, this comes at the back of the 5-year bull run that they just had. 30% cite lack of saving discipline, which again, as we saw, 4 in 10 saving less than 20%. So they do, and here that's the challenge they see. So they do want to save, but they are not able to. That's how the two data points collaborate. 2 in 10 say they don't fully understand the all the investment options available to them. And then 10%, as we saw on the second slide with the ad, they report high debt burden is something that they are carrying, which is causing a hindrance in them able to go on and move.
So two very interesting takeaways from there. If you read the December 2024 ka RBI ka financial stability review, usme bhi RBI is saying that 1 in 10 middle class families are struggling with debt. So unsurprisingly, similar finding from this survey, right? I thought because we're targeting a slightly richer demographic, I had thought debt burden ka weight will be lower, but I was wrong. Even though we are targeting a richer demographic, 10% of households seem to be struggling with high debt. I think this will become a big theme over the next couple of years. High debt burden in affluent households, I think, will become a big theme in the coming years. But the most striking bullets, I think, are the first two bullets. Remember, we did this survey in March 2025, nearly 5 years into an epic bull run. उसके बावजूद 40% of households are saying they have received low investment returns, right? Big stunner for me. That कैसे हो सकता है 5 साल into an epic bull run, 40% of HNI households are saying low investment returns, and in spite of all the what should I say messaging on mutual fund sahi hai, in spite of all the messaging that influencers are doing, media is doing, a third of households are saying they lack savings discipline, right? Stunning, right? You would think itni आवाज हम सब जन कर रहे हैं, people would say, but they're saying it's a problem, yaar. Debt is a challenge and savings discipline is a challenge.
Yeah. So moving on. So the second big highlight, big finding essentially is HNIs. They do have high financial aspirations, right? But they are failing to plan for it. To bring this more, so we surveyed what are the various goals, financial life goals that they want to achieve, and 40% of the respondents want to retire early before 60. That's the first. That's the one goal. 40% want to buy a house. Another 40% want to start a business. Right, and 75%, 3 in 4 have some goals with regards to the children, either higher education or marriage. So what you see essentially, this sums up to more than 100 because there are multiple goals, but there are multiple goals, and all of them are high hitting of sorts.
There's much on this page which is unique to India. If you went to America or Europe and did this survey, I guarantee you 3/4 of families there are not saving for their children's marriage or their bachcha's education. And I guarantee you, even in America, 40% of HNI households don't aspire to start a business. It's very intriguing. 40% of HNI households are telling us voluntarily that they aspire to start a business, right? And yet they have other aspirations which are demanding. Padhai, shadi, early retirement. And effectively what we have ended up in our country is we've got many goals and aspirations. We're an aspirational society. Right? बहुत आवाज चल रही है, बहुत achievement का culture बना है. Everybody wants the moon, but the savings rate is clearly not commensurate. The savings rate, as we're seeing, half the people between 30 and 45 are saving less than 20%. Less than 20%.
Yes.
But those people aspire for the moon, and the disconnect is big, folks. And as we go further down, we'll peel the layers of the onion. कि क्या हो रहा है? इतनी सारे अरमाने हैं, हजारों ख्वाहिशें हैं, right? But the savings rate is modest, right? And that disconnect is effectively what the survey is highlighting in many different ways.
Yeah. So then next we looked at how is their asset allocation aligned, right? So what we observe, essentially real estate still dominates the asset allocation in HNI's portfolio, right? So half of the respondents had more than 20% allocation to real estate, and this excludes the primary residence, the house that they live in. One third have more than 20% allocation, so two-thirds have less than 20. Essentially, equity comes next. But the most strikingly, 14% of HNIs don't maintain any emergency funds. So we asked how many months of your expenses you park for emergencies. 14% had zero. So that was, I mean, allocation is on one hand, but that's even for the emergency planning. There is quite a bit of gap to cover.
Right, and again, coming back to very peculiarly Indian thing, I think India has this in common with other English-speaking countries. This obsession with real estate. So more Indians are overweight real estate. If you see the slide, effectively the slide is saying more Indians are overweight real estate than are overweight equities. Right, very interesting, right? In spite of the last 5 years ka bull run, more Indians are overweight real estate. Half of them are overweight real estate. Remember, we're excluding the primary residents, right? Half of Indians have more than 20% in real estate than Indians were overweight equities.
Yeah. So then we look at what's going on in terms of thinking thought process, which helps them with the decisions. And strikingly, 51%, even in the HNI segment, they seek more guidance on diversification. 3 in 10, 1 in 3 essentially, they are not still very comfortable investing equities, which reflects in the lower allocation when on the previous slide that we saw. Right, 20% have start globally diversifying. But 23% are not familiar at all with the global investing options. So diversification, still some ground to cover. They do seek they actively seek diversification, but some of them have started, but a lot of ground to cover.
Actually,
yeah. And this is the third piece. So we asked them how do they make investment decisions, and what does it make sense for them. The highlight was that they seek a trusted advisor who can guide them through, rather than just the products that help them grow. And this comes from this slide. So we asked who helps them make investment decisions, and 87% responders rely on somebody else to help them with deciding on where to invest. Right, this is dominated by wealth advisors, family, friends, even banks, RMs. Only 13% decide for themselves. And if you look at retire, that's the smaller box there. 1 in 3, 36% rely on the bank RM, disproportionately higher than the other age groups.
I see this is a good thing. Effectively, this is acknowledgement by people that mujhse na ho payega. I need experts to opine. This is a good thing. This suggests that people are aware there is a problem. They are seeking help. Right. The next piece is where the burning platform is.
But 2 in 3 are, for some reason or the other, dissatisfied with the advice that they receive. Right, and we also asked the reason why. What is it? So 31% cited that the advice they receive is somewhat of one size fits all. It lacks personalization. What they want is an advice that is tailored to their needs and their goals and unique situation, which helps them move forward. So 33 in 10 say they would want more personalized advice, which is aligned to who they are and what do they want. 17% asked for conflict-free advice, so they want an advice which is aligned to them. And 14% again transparency. Again, this sort of links to the first point. They need to know wherever they're investing, whatever they're investing in, how is it aligned to their investment objectives, and they want to understand that, not just go by what's being said.
I think it's worth saying we didn't ask the question, so therefore I'm flagging it to you. We didn't ask the question because it only hit us once we saw the survey results. It could well be that this dissatisfaction, right, the fact that overwhelmingly people are unhappy with the advice, it could well be because their own aspirations are so high that it's not easy for the advisor to help people deliver on such punchy aspirations with modest savings, right? And it's a tough job. I mean, it's a tough job for the advisor to say, sir, aap double kar dijiye savings rate if you aspire to the moon, right? That piece we didn't ask. I think when we redo the survey agle saal, we'll also slip that question in. So therefore, whilst the dissatisfaction piece is clear, it could well be that a big part of the dissatisfaction is due to people's elevated aspirations relative to their modest savings.
So then we asked, do they see value in professional financial planning, given that's what we were sort of looking at. So 82%, overwhelmingly 82%, and this is uniform across. So we looked at various cuts by cities, by age groups, by the level of wealth they have and the income they do. 80 to 82%, the answer is they do believe that a professional financial planning, which helps them plan their goals and journey through to them, is something that they would find value in. And then we asked them what is it that they're expecting from this service. 32% mentioned they want help in planning their goals. So they want to help translate their life goals into financial goals so that they know what they are after, what are they looking to achieve. 38% was personalization. Again, goes back to the previous point. They want an asset allocation. They want the investments personalized to them, based on their own risk tolerance and directionally aligned to their goal, so that they can actually sort of get there. And they want a conflict-free, transparent advice, which is aligned to them, works more for them. So that's the culmination of essentially at the back of planning. This is what they are looking for. Yeah. So so we looked at all of these, and then essentially move on to how are we looking to sort of solve that. So you want to?
Sure, yeah. So we've made abundant use of technology here. So it'll be unfair to say that we've reinvented the wheel. We haven't done so. What we've done is taken what we've published in the past, turned it to technology, and then use that to offer a zero cost, no cost, free personal goal planning, both software. We'll show you the software in a bit. Whichever laptop is being used for the projection, is that connected to the internet? Guys, do you know, ad factors, do you know the software that is the laptop that is being used for the projection, is that connected to the internet? उसमें इंटरनेट है क्या यहाँ पे? अगर कर लो, यहाँ पे तो फ्री इंटरनेट है कोरम का, अगर आप कर लो तो you can also show the demo, do a demo of the software. ठीक है, तो we'll demo in a, so this free software which we made available. Then the next piece is, it's just not enough to say देखो आप software आप data डाल के अपने आप को asset allocate कर लो. It's not enough to do that, right? Because then the client will say ठीक है, I understand the asset allocation, where are the tools to hit the goals, right? So for that we've built over the last 6 years now uniquely diversified global portfolios, low cost, high quality global portfolios, which include shares from listed companies from Europe, America, East Asia. We're coming up with another low cost offering that Pramod is working on that construct, the global construct. And then domestically, 3 years ago, we built a quant team which creates diversified local portfolios, which have high quality companies across sectors, right? So it's not enough to say हमने आपको free financial planning करा दी, आप कर लीजिए, because people will say अगर उतना ही था, if that was all that was required, I could have figured this out myself. You also need to give them the tools. And then the last piece, and I would submit to you perhaps the most important piece, holding people's hand through the years as they go through the journey. It's not enough to say, here's the dawa, please drink it yourself. You also have to stand by people as they go through that journey.
Yeah. So the first piece that talk about, essentially it's a no cost tool. So there's a cost of doing this, freely available. You can essentially scan it now and get this done within 5 minutes. It asks
you can do it on your phone for yourself, right? So I did it for myself. It gave me some difficult answers which I'm digesting. Plan.marcellus.in. You ask some basic data on what you aspire to, what you currently have, and it gives you a sense of where you stand in terms of the fulfillment of your goals.
Yeah. So it's no cost, no obligation to invest with us, but within a few questions it will help you see how do you stand in terms of achieving your goals as of today.
Or if you don't want to use this, you can read मेरा 2018 का किताब, Coffee Can Investing. That might take a little longer than doing this, but this might be the easy way to get the answer.
Yeah.
By the way, that book is being translated into Thai now. Gujarati, Marathi, Hindi हो गया है. Thailand से demand आई है. So for some reason, people in Thailand are also interested in Coffee Can Investing.
Yeah. So that's the second point. So
carry on.
Yeah. So what we all have is essentially the uniquely diversified portfolios for various asset allocations. But the outcome of the goal planning essentially is the asset allocation that you need to achieve those goals. It can't be focused. So on the global side, we have within portfolio of dominant global businesses, essentially investing into global franchises, which is available from both Gift City as a PMS as an AIF.
I think the local piece is worth highlighting. So some of you asked me at the beginning, कोई product launch हो रहा है क्या? नहीं, product launch नहीं हो रहा है, but we've started from several months now a multi-asset PMS, where once the solution emerges from the asset allocation construct, we are asset allocating across a bunch of mutual funds. There's logic and science behind it, right? Remember, this is PMS, so minimum is 50 lakhs. So if an investor comes to us with 50 lakhs, we can't buy the Marcellus in-house product, because Marcellus in-house product will immediately take up the 50 lakhs. Rather than doing that, we're investing in third-party mutual fund products. We're using direct code. So no commissions to us from the manufacturer, and there's a team of researchers who've used techniques to identify which products are appropriate for which client, and that multi-asset PMS, there's a family of multi-asset PMSs which are used to cater to investors' needs. The needs are identified by the financial planning exercise. The first bit is the software, plan.marcellus.in. The second bit is one of Manish's colleagues, one of our planners, sitting down with the client for kitna time lagta, Manish?
It takes a couple of conversations, hyper personalized. So it takes some interaction.
Free of cost, right? Yeah. So software is obviously free of cost, plan.marcellus.in. But even those 2 hours of structured financial planning is free of cost. Uske baad, the client can say, I'm not interested in your solution, and take the plan and go elsewhere. Or if they say, nahi, yahan pe karna hai, then we use the PMS wrapper, and inside the PMS wrapper, we buy the appropriate mutual funds at direct code.
Yeah. So the outcome of an asset allocation essentially is the diversified plan tailored to their goals, their risk profile. What should be the asset allocation like? And again, the multi-asset PMS goes on to execute those asset allocation for the investors, and it's actively managed. We do the rebalancing, monitoring, tracking, all of that.
Mutual funds. The underlying is
mutual funds and ETFs.
Absolutely. Direct code to mutual funds.
So again, direct demats works same as a PMS, but instead of the equities, you have mutual funds. Again, the idea is to get the exposure to the asset class in the most cost effective.
It's like this is a service. It's provided. I think, do we have clients here as well?
Yeah, we have clients here as well. So we went live in August. We started in August. We have some investors too. The Pramod and myself are here.
So their children's future relies on the multi-asset PMS. So jokes apart, there's a lot of science which goes on into Konsa mutual fund, which mutual funds will make it, which small cap mutual funds, which large cap mutual fund. This being Marcellus is obviously heated debate. कि right, वो वाला right है या ये वाला right है. Krishnan is our quant guru who's driven all of this. Krishnan's history is, before joining us 3 years ago, he was at Morningstar, before that D. Shaw, Goldman Sachs, right? So there's science behind choosing which mutual funds to buy. There's science behind asset allocating for the individual, right? And then you bring it together for a personalized solution, say for Sundar. So we're not giving you a off the shelf कि देखो सुंदर ये 3 multi asset है, आप पे एक चिपका देंगे, नहीं हो रहा है, right? We're first doing the financial plan for Sundar, right? What do you need given your aspirations, given your means? What is the asset allocation that you need? Basis that asset allocation आपके लिए multi asset PMS बनाया जा रहा है. Inside that PMS lie other mutual funds, third party mutual funds bought on direct code, low expense ratio, and thus you're getting the whole mutual fund revolution coming to you. The rise of technology, which is allowing us to do financial planning for you at relatively low cost, and the combination of the tech revolution and the MF revolution is colliding inside your multi-asset PMS, personalized for you or for Deepthi or for Srishti or for Samar, right? So there's plenty of disruption behind this. Technology has allowed us to disrupt. The whole MF revolution has allowed us to disrupt, but it means that we can give the Indian middle class, we can give the Kumars at Kandivali what they need rather than some standard off-the-shelf solution which might not be appropriate for them.
So your target for this service is HNI or middle class? Because in your
targeting the service,
target for your service is HNI or middle class. The first slide you said HNIs, but you have a plus 20 lakhs, which is HNI.
So it's a PMS offering, right? And therefore the 50 lakhs amount will have to be met. Otherwise, SEBI is not gonna let us offer. We're a PMS provider, so we by definition we have to have 50 lakhs. So anybody who has 50 lakhs to invest can join us in this service, right? But if you don't have 50 lakhs, then yes, we can't offer it. Our license doesn't.
So the survey you said that the Kumar's example had 20 lakhs plus family income, right? So that doesn't sound kind
No, so if you're earning 20 lakhs plus, that doesn't mean your corpus has to be 50 lakhs. You could, if you're earning 20 lakhs plus for the last 10 years, you're highly likely to have more than 50 lakhs of corpus, right?
So the volatile income both they sort of accumulate, which is why we had to start onto this. But it's not just HNI to ultra HNI. So we have folks who have wealth more than 10 CR as well. So it's pretty comprehensive.
Speaking up, just because the family earns 20 lakhs doesn't mean they have 20 lakhs of wealth or 30 lakhs of wealth. Many families who earn 20 lakhs have 50 lakhs of wealth. In fact, they need to, given the demands that education and retirement put on you. Having 50 lakhs of wealth for middle class families, HNI families, call them what you will, I think is a pretty essential ask in India.
Plus, there are cuts to it. So, someone in retirement will not be earning at all, right? But they would have enough. They would have generated enough wealth to manage. So, that's what the scope. Answer to your question, the goal planning piece, there's no cost to do it. So that's available to anybody and everybody. Takes a couple of questions, gives you what percentage of your goals are secured based on your existing investments. The asset allocation and the deeper piece, obviously to invest in a PMS, you have to come 50, but the goal planning is available to anyone. You can simply go to the website and do that. You get a report at the end of it, which tells you how are you placed. So that's one. And on your question, so we've been doing the asset allocation and planning for a year now, right? We have existing investors. So whenever we do reviews, we offer whether you want to help us see, because that also gives them a guidance on, how does our products, our PMS that we used to do before fits into that. So we've been doing this for a while. We've turned into technology because it's easier. It's also cost effective for us, plus anybody can access it. So that was the objective. Both the asset allocation service was live for longer. Multi-asset PMS went live in August. And now essentially we turned it into some sort of a technology which is easily accessible and comes at no cost. Yeah. And this is the third and the critical piece. So we saw from the survey and what we also observe, essentially it's not a one-time exercise. Whenever you do a plan, whenever you define your goals and work out your allocation, that's true today. Every day things change, the external market change, your internal needs also change. So it needs regular refining, regular recalibration of your plan based on how things are moved around. So the first point essentially is on refining goals as we sort of go. So we do this every 6 months or at any point investor wants where there is substantial change in circumstances.
Effectively, this is to prevent the amygdala hijack, right? So amygdala is वो दिमाग का सामने वाला प्रीफ्रंटल कॉर्टेक्स का सामने वाला बिट है, दैट्स द फाइट और फ्लाइट वाला ट्रिगर, राइट? अमिगडाला हाईजैक मतलब फाइट और फ्लाइट वाला ट्रिगर. दैट्स व्हाट मेक्स पीपल मेक द रॉन्ग डिसीजन एट द रॉन्ग टाइम. मार्केट नीचे गिर रही है, वर्स्ट पॉसिबल टाइम में सब अपना माल बेच के भाग जाते हैं. मार्केट आसमान में चढ़ा हुआ है, राइट? से मिड कैप टुडे आसमान में चढ़ा हुआ है. एवरीबॉडी एंड द मदर फादर pours into mid caps. Not their fault, it's their amygdala's fault, right? So the amygdala hijack is usually one of the simplest hacks in psychology, is have a trusted counselor who prevents the amygdala hijack. Go on.
Tell them that you need to reduce your aspiration for you.
Yes. Yeah. Yeah, so three key levers to essentially bridge the gap between where you are and where you want to be. So first one obviously is you need to bump up your savings, which was also the first one we called out, right? Delayed gratification and all those things you all know, but it needs reminder. I mean, just to share with you, when we ask folks to do this, right, half of them come out saying that doing this itself was a big eye opener because I never thought what's happening in my cash flows, right? So that themselves gives them an idea of where the extra bleed is. But yes, bumping up savings, that's the first thing. Second is if you can move around goals. If you're short, you can move around goals. That's the second thing you can do to bridge the gap, where you can delay some non-discretionary goals. And the third thing is getting their existing asset allocation in place, because what happens is you have Mr. Kumar, right? He has disproportionate allocation to real estate. Is it really compounding at the rate of return that he wants his overall portfolio to compound? So there's a misallocation that comes out of it, and that's the third thing one can do. And actually, into the second point, future savings that come in has to be systematically invested into, again, in informed allocation, and not don't have to forget in your bank account. At the same time, don't have to take disproportionate risks. So the outcome of this exercise essentially tells you, what's the rate of return you need, what risk profile you have. So even without anyone's advice, you can actually make informed decisions and be more
So I'll
oriented.
put my hand up here because courtesy plan.marcellus.in, I made a informed decision. So I used to have a 12-year-old car, right? And like any other middle class or upper middle class family, I thought, ye gaadi depreciated ho chuki hai. I'll get rid of it and buy another one. But then I did the software piece and I realized that, hey, if I didn't buy another car, I could compound better. That would allow me to hit some of my aspirations at age, rather than at age 60. I could get there at age 57. And once I did the maths on the opportunity cost of owning a car in Mumbai, I said जरूरत नहीं है. Right, so I don't have any real estate other than the house I live in. So Mr. Kumar ka ek jo problem hai, which is he's got an investment property. Thankfully, that problem I didn't have, courtesy years of hanging around with people from Marcellus. But I did have the other problem, which is having a expensive asset which is not required. Now, those who are, others might say, nahi, gaadi to chahiye. In that case, my suggestion would be heed Bhargava Saab from Maruti's point of view. He's repeatedly saying every 2 months, Bhargava Saab from Maruti says that 10 lakh ke niche ka market pura mar gaya hai. And I think that's a tragedy, right? Given what the survey findings are showing, I think it's absolutely bonkers in India that 10 lakhs ke niche ki gaadi ka market mar gaya hai, because I think this survey is telling us Indians desperately need to buy chota cars. Ideally, avoid the car, but if you want the car, then buy the chota car, because buying a bada car sucks out meaningful compounding out of your portfolio. 20-30 lakh आपके portfolio में extra add होना this year is effectively a few crores 10 years out, right? So those are the decisions that the plan.marcellus.in software will trigger, right? And as we go deeper into the journey, Samar, hopefully we'll be more effective in helping people make these live calls, because I think that's where part of the challenge is kicked in. The whole post-COVID world of heavy-duty aspiration, right? What social media is firing at us is the lives of the great and the good and how they're living it up. And that's anchoring people's aspirations at a very high level, even though their income might not necessarily be commensurate with that.
We discussed this, Saman. I think if you were to be a trusted advisor, you have to give that, honest advice that you'll have to bring down your aspirations, but it's never a pleasant conversation. But I don't think that's the challenge at the margin. Like Manish mentioned, there are three levers, right? Either you increase your income, but there's a limit to it. Given my skills and experience, there's only so much I can do to get a higher paying job or create a business. The second is to spend less and save more. Again, beyond a point, there's only so much you can save. The third is where I think there is a practical solution, where if you invest sensibly through asset allocation with trusted advice to control that amygdala effect, which is basically control your emotions from greed and fear, there's still plenty of scope for most Indians to fulfill those aspirations. I'm not factoring in the aspirations itself being a moving target, right? Lifestyle creep is a real issue. If I decide that these are my aspirations and I'm fully sorted out, unknowingly over the next 5-10 years, I've actually moved up those aspirations and suddenly I feel short. That's always the case. But I reckon even without having to pull people's aspirations back, even without having to get them to increase their salaries or cut down their expenses, if you asset allocate properly with a plan, there is most Indians' practical aspirations can be fulfilled. That's where the big gap is, because most Indians have invested basis greed and fear, right? The low returns that Manish said is a reflection of the fact that if you look at the last 1 year, they've contributed to almost 50% of the demat accounts that have been opened. What does that mean? Most people have started investing after the markets have gone up.
The last 1 year ka demat accounts is half of India's demat accounts.
Almost, I think, yeah. And if you take the last 2 years, the point is people tend to come in after the markets have run out. And as a converse, people tend to go out at the worst possible time. So the market returns don't necessarily translate into returns in people's personal portfolios, which is where the role of the advisor is. At the end of the day, the science behind what Manish has put up, without undermining what he's put in terms of the ability to plan, figuring out how much do you put into equities, fixed income, real estate, and gold, is not the rocket science. The real value add is the counseling piece. Stopping people from doing stupid things, succumbing to greed and fear is the real role of the advisor. And the survey suggests that there is a gap out there. It's not easy to do it DIY, right? Because at the end of the day, evolution has made us humans succumb to this, which is why you need a third party to stand before you every now and then and say, do not put into small caps now, or do not exit at the bottom of COVID, do not exit at the bottom of the Lehman crisis.
So I think we'll solve the Kumar's and Kandivali ka problem, and then
Yeah. So, how do we solve Mr. Kumar's conundrum? The conundrum was how secure is my financial future, right? So, the first stage essentially is to translate life goals, which are words, into quantifiable financial goals, and also assess the risk. So, we start with the goals. So, we have the emergency fund, which has to be the first goal for everybody, and then we look at the other four. What does it value today? Using time value for money, what does it mean in inflation adjusted future value? Right, what's most important essentially is the time horizon and orientation. For something like an emergency fund, you don't want to invest in equities. It needs to be available here and now. You're not expecting to for it to grow. It needs to be around, right? So identifying that. For anything that's short term, next 3 years, again you need to safeguard from market volatility, so it has to be thought through differently. Anything that is over long term, you need to see whether it's growth oriented, aligned with your risk, and it's liquid, available as and when you need, right? This is that you do the asset allocation for every tier, and it tells you basis what you expect.
Going to the next slide.
Yeah. So Mr. Kumar needs 5.6 CR today. He has 3.5 CR, and he's only 60% secure as of today. Next thing to look at is what does the current asset allocation look like. So we have real estate, which is chunky, right? But again, we know the issues with that, the lack of flexibility, liquidity, and so on. There are Indian equities as very proportion, but again, led with the small caps and concentrated. And then we have some debt allocation. On the right hand side, essentially the outcome of what the goal-based identified asset allocation would look like. So it says emergency funds, you need to have 25 lakhs for emergencies. For your car, you need to park that money into less volatile.
Actually, देखिए real estate उड़ा दे रहे हैं, right? Real estate पूरा उड़ा दे रहे हैं asset allocation में.
Yeah.
Right. So left hand side is the status quo. Left hand side is Mr. Kumar is currently, or Mr. and Mrs. Kumar are current allocation is left hand side. Right hand side is where we are saying they will go. Right, and you can see there, Manish is saying 6 months emergency funds and गाड़ी के लिए पैसा रखेंगे. Everything else goes into equities, not just desi equities, but global equities as well. Right now, this actually goes back to the very interesting question that the gentleman at the front raised. Right, so he said, "ये MF में होगा या PMS में होगा." If you think about it, right, very few of your and my friends will have aspirations which will be less than 50 lakh में funding. I think it's impossible to have aspirations in modern India जिसका funding 50 लाख से कम में हो सकता है, right? तो कुमार्स का funding के लिए मनीष 5.5 crore चाहिए, right?
Yeah.
So Kumar's lifestyle, their aspirations to be funded 5.6 crore. Now you can argue they're slightly more affluent than the typical middle class person, but very rarely you will find that the readers of your publications or the viewers of the TV channels here will have aspirations which can be funded for less than 50 lakhs. And therefore, the PMS vehicle with Indian equities inside it, foreign equities inside it, liquid funds inside it, global equities inside it, and a diversification therein, the PMS vehicle becomes the ideal vehicle to help middle class India, upper middle class India finance their aspirations. If policymakers are watching, listening, or reading your publications, my request to them will be, if you can create something like a 401k for our country, जहाँ पे वही PMS vehicle tax free बन जाए, then I think we will see a real revolution in our country. I think at the moment NPS अलग है, EPFO अलग है, insurance अलग है, mutual fund अलग है, PMS अलग है. In this construct, we are bringing together MF and PMS. But if the regulator allows people like us to bring more stuff together, that's how we can help middle class India, upper middle class India, HNI India close the gap between their means and their aspirations. And it is a hedonic treadmill, right? We use Kumar's at Kandivali as an example. They earn 50 lakhs net. There will be plenty of families in this city who earn 2x, 3x as much. But unka bhi mismatch between their earnings and their aspirations, unka mismatch will be brutal. And this 50-60% number, most HNIs in India are only funding 50-60% of the aspirations. There is a big gap, and that gap can be fulfilled partly by modern technology, partly by old-fashioned human counseling, as Pramod and Manish are advocating, and partly by bringing together cost-efficient solutions that the regulator has provided us. So we'll stop there. If you have questions, fire away. We'll try our best to answer them. Hi, go on, Srishti.
Just wanted to understand how is this very different from a wealth management perspective, given that you said it won't just mutual funds or the gold or anything else tagged in a PNS. So
How is this different from a wealth management offering?
No, it is wealth management at the end of the day. It's not different. It's the way it's delivered, right? So, like I said, one primary bit is the lack of conflict of interest, right? In a traditional wealth management, the way it has evolved in India is that you're literally selling a product and taking commissions from the fund house. In my view, your client is the one who pays you. If the fund house is paying you, it's your client, not the investor. So the primary, I think, relate back to what Charlie Munger once said: "You show me the incentives, I'll predict the behavior."
Yeah.
Right? If the incentive is provided by the fund house, you are not aligned to that goals. I mean, this is not an Indian problem globally as well. There are solutions, RIAs who are more aligned to the client's interest is one way to differentiate this. The second differentiation is from the experience and from the survey as well. There's lack of personalization. If you're incentivized to sell funds or products, you're not thinking whether this is the right thing for the investor or the client, right? In fact, the survey results also point out that's the biggest shortcoming in terms of what the wealth management community has had to offer so far. If you can solve for that, I'm not saying all wealth managers are doing that. There are plenty of very good IFAs and RIAs who are aligning themselves to clients' interest and who are personalizing, providing proper asset allocation. But the biggest value add is the counseling piece. Like I said, that is very intensive. You need to build trust and you need to make really hard calls, right? Because the natural interest of the client will be say that, look, I heard from my golf buddy that XYZ small cap fund has done superbly well for him. I want to buy. The advisor's point is yes, perhaps the time to buy that was 3 years ago. This is the time to diversify. That sort of counseling is hard. Again, I'm not saying there's nobody who's offering that, but we reckon, as the well survey suggests, anecdotally, our own experiences that there is a gap in the market. So it's not too different from what you call wealth management, but I think a better word would be financial counseling. Rather than wealth management. Wealth management suddenly makes it seem like there's a lot of wealth to manage, but as the survey shows, there isn't.
charge.
Yeah. So the wrapper, the PMS itself is very transparently charged 50 basis points of the investments that they do. The underlying investments are again in direct mutual funds, so the cheapest way to access to that, or ETFs. If ETFs is the better way to do. So again, there's a blend into that, but that gets charged into the NAV. What Marcellus earns essentially is 50 bips flat, which is very transparent as a fixed fee on the investments, underlying investments.
And whatever, say, expense ratio.
Of the MF.
Yeah.
It's deducted in the MF that is bought into your demat account that the PMS that manages.
So your expense ratio question is actually fair because assume that the underlying MF costs 1% and we are charging 0.5, then the overall expense ratio for the client is 1.5% and the NAV gets depleted by that quantum each year, of which 1% goes to the MF and 0.5 comes to us.
So our underlying blended basis comes.
Say, then visit sure.
So the extra is the 0.5.
That's for the advice, right? Which is what I'm saying. You can do it DIY. We've tried it, but because we are all subject to that amygdala effect, we need some third party to come and advise us. In some ways, I think Fidelity produced a study long time back that the best performing portfolios, remember Fidelity also has a wealth management service, the best performing portfolios in their client base was of dead people because they don't act. If you do it DIY, we're always subject to these greed and fear.
You'll sell at the worst time, you'll buy
at the wrong time. So a discretionary PMS takes that discretion out of you and leaves it with a third party, in this case, an advisor like Marcellus or any other advisor?
One thing we see, right? So this doesn't need any skill set. Rebalancing. So you have an allocation. You have to rebalance it to the same proportion every year. What it does is, whatever has overgrown, say small caps are overgrown, you trim it off at the end when it goes out of proportion, and you buy what has not worked. That essentially makes you a contrarian. You're buying something that has worked and buying something which hasn't worked. Yeah.
You're buying something which hasn't worked, selling something which hasn't.
Which has worked. Yeah. Now this is what we all want to do, but at bull run, would we do that? Right? It's very difficult to do it ourselves, which is why somebody who is dispassionately follows the process for you, that brings in the value. Rebalancing is what we actually do. So while we set up the allocation, we actively rebalance the portfolio on a frequent basis as and when there's a need. That itself, sort of justifies the fee, but there's more to that. But the point is, DIY, yes, certainly will be cheaper, but you won't be able to do these things. If you leave a structured portfolio, 5 years hence it will be way out of shape, which will again be not very different from it. Your asset allocation will be all over the place. So stuff like that, this is actively managed like any other portfolio.
And what is the actual expense ratio on the client base?
So blended basis, the underlying NAV comes to around, the underlying TER comes to around 65 basis points, and you add 50 bips to that, so it's around 1.11% to 1.15%.
As passives take off in India as well, right? We've had a exceptional last 4 years where there are a lot of active funds outperform. But if you look at how developed markets have evolved, even in the US now, 90% of active funds don't meet. So as passives become more attractive, cost structures will go down even more, right? The 65 that Manish is talking about continuously go down as you push more passive products in the client's portfolio, which is serving the objective. And at the same time, you're not taking the manager selection risk. I mean, I can look back and say so-and-so manager is done, but there's very little persistency in that. And therefore, this expense ratio will continue to come down. What you can't replace, I mean, of course, there are a minority of investors who are emotionally sorted, who can control their emotions and do it themselves. But as we've seen in our experience, those remain a very, very tiny minority.
AMS said how you charge, there's a fixed component plus there is performance. So would it be the same year or it's 1.6%?
So on the PMS, it's either fixed or performance. Either of the two.
Going to offer that fee structure.
Onto this one, see, on a variable and fixed. Yeah. So I mean, we would want to if we can, but
I think it becomes unfair here, right? Remember, in the PMS, then when we come to Marcellus, say to invest in little chaps, the client is saying, I want to take small cap risk. You go ahead and take the risk for me, and I'll reward you more, Marcellus, if you're successful in taking the risk. Here, the client is coming to us saying, I need counseling, right? I need counseling. And if we then say we are happy to charge you a performance fee, then our interests are skewed in favor of risking up the portfolio, right? So that becomes unfair in a financial counseling construct, because we're then skewed towards saying, chalo aapka load up kar dete hain, chal pada to we will end up getting the performance fee, right?
Yeah, again, incentives drive behavior, right? Here, the idea is not to maximize return. It is not to maximize return. It's to help you fulfill your financial goals or aspirations. The moment I put my incentive as maximizing return, then the whole thing falls flat on its face.
So it's more of a solution than a product.
So
product you can do.
The gym trainer here. Yeah. We're not the nightclub host. Right? We're the gym trainer here, and therefore the gym trainer, you can understand, right, is a person you view with mixed feelings, because he or she makes you work hard early in the morning or late in the evening. You know it's good for you, but you don't sort of fully appreciate it when you're doing it real time. So as someone was alluding to, we will tell them party's over in small and mid cap. Let's take money off the table. Let's load up on stuff which is unfashionable, say high quality large cap. And the client might say, boss, kya kar rahe ho? Abhi to maza aa raha tha small and mid cap mein. Why do you want me to buy high quality large cap? That to nobody buys, right? So there's elements of health and fitness. There are metaphors for health and fitness which work very well for the investment counseling construct that Manish has built.
And just one last question. So you're also coming up with a MF license. So won't it be more skewed to your own?
No, so that's something that Manish has been clear from day one. In fact, even in our existing multi-asset PMS, we can buy stocks from our stock PMS portfolios, which we've consciously decided not to do. because the whole genesis of this service is to break the conflict of interest. If we ourselves put this conflict, then we'll be lying to ourselves and our clients. So we've consciously decided that this will be an open architecture. There won't be any skew. If for some reason one of our mutual funds fits into the client's goals, then it might show up. In fact, as we speak today, there is no presence of any Marcellus product in the multi-asset PMS.
So the product selection is very dispassionate process. It's process driven, and it has criteria. Again, the lowest cost, the right allocation, and again there is some. So we look at track history. So there's a process, and if whatever qualifies under that process is dispassionately selected here. As of today, none of the master and in a 50 lakhs portfolio, we can't. I mean, none of our whole scheme will sort of go into. But the idea is clear. It has to be. We have to break the conflict, and we have to really go the process way, whatever the best fits into that, and there's plenty available. So that's how it works.
So I have two questions. One is where would gold and silver fit into this whole survey?
Lovely, yeah.
So in terms of so I'll just go with that. So in terms of gold allocation, we do have in the multi-asset. Was that the question, or does the gold fit into?
What do you want to show? Multi-asset PMS.
Yeah, so we still have, I mean, the gold allocation is there. We found in the surveys, there was a question on the gold allocation as well, and it is there. It's still, endowment effect, as they say, we are comfortable with that and we continue to hold to that. But it's more in the physical form in terms of jewelry and so on, so but not so much on the financial front, which does help. But it's looked at as something which you will not, it's not an investment, it's an asset, and that's how it's kept. But gold has its value as an investment as well, which we clearly saw in the last couple of years, right? And it happens. All of us have seen that asset quilt where asset classes jump one way or the other. So in the multi-asset portfolio, we do have 10% this allocation when we talked about. There is an allocation to gold, and that varies between what risk profiles you sort of go with. But it's purely a dispassionate investment. Again, if we see it has moved out of proportion, we will the systematic rebalancing happens all the time. So it does belong in the portfolio, but it's managed as an investment, not as an asset.
So gold as an asset class should be there in every portfolio. And the biggest reason is the fact that it's uncorrelated with equities. As you've seen in the last several years itself, long-term returns of gold and rupee terms have actually matched the Sensex or the Nifty. Yet it works in different periods of time. And the whole idea of asset allocation is diversification across uncorrelated assets. If you buy the assets which move up and down together, you don't need diversification. You just buy the best performing asset. In gold's case, the biggest value add of gold to anybody's portfolio is the fact that it's uncorrelated with the rest of the portfolio. What does that mean? That means that the volatility in your portfolio is less, right? Which allows you to sleep peacefully at night, because throughout September to February, if you saw your equity portfolio being hammered, the allocation of gold would have said, okay, something is working in my portfolio, overall portfolio, I'm still headed towards my goals. But this is well understood. Everybody understands diversification reduces risk. What most people don't understand, and the best kept secret, is diversification actually improves returns as well, if you combine it with systematic rebalancing. The fact that equities and gold move differently. Imagine a period where equities have delivered well over the last 3 years till September. That means that your equity allocation in your portfolio would have gone significantly above where it's supposed to be, and gold allocation would have come down. If you do systematic rebalancing, the right thing to do is reduce your equity allocation, increase your gold allocation. So therefore, you actually bought gold low, sold equities high, which is nothing but the holy grail of investing. Sell high, buy low is allowed if you diversify across uncorrelated assets, and gold's biggest value add is it's uncorrelated to your other asset classes.
Two related finding, right? So gold ka volatility utna hi hai jitna Nifty ka hai. So gold and Nifty volatility is the same quantum, but the volatility happens at different junctures. And as a result, as Pramod is saying, you get strong diversification. The second pairwise finding is S&P 500 gives only a little higher return than Nifty, right? So S&P 500 10-year return, I think, is 12%. Nifty 10-year return is 10%. This is if you do it both in dollars. Okay. So at one level, you think S&P 500, what's the point of putting money in S&P 500? You only get 2 percentage points extra. But again, S&P 500 and Nifty have low correlation. And therefore, if you combine S&P 500 and Nifty, you sleep better at night. Your volatility is lower. You combine gold and Nifty, you sleep better at night. Your volatility is lower. Now, Think about
Another
combined.
pair which works well is quality and value stocks. They work very differently, uncorrelated.
Lovely.
First 4 years till a year ago, value strategies were doing really well the last 3 years.
Lovely.
If you look at the last 1 year, value strategies have come down, but quality is picked up. If you have a mix of both in your portfolio, you'll be able to achieve that reduction of risk. And if you combine it with rebalancing, improvement of return as
Right.
well.
And for me, the big value add of watching Manish and Krishnan build all of this is realizing that if you blend these things, right? International equities, desi equities, gold, quality value, if you blend all of this, your return is higher and your volatility is lower. रात को नींद भी आती है, पैसे भी बनते हैं, right? And therefore, the chances that I will end up like Kumar's at Kandivali with unfulfilled dreams reduces, right? So, without giving away all of our secrets, that's the crux of what we're trying to do. Help families who have dreams, aspirations. Modest means hit up as many of those aspirations with realistic savings and with scientifically thought through asset allocation. जिससे you pair up as many low correlation combinations as you can. International equities, global equities, gold, nifty, value investing, growth investing. Pair up करके volatility ramp down, returns ramp up, and the Kumars at Kandivali hit up all their goals. They get to their 5.5 crore corpus that they need.
So, like they say, there is no such thing as free lunch, but there's a famous saying that diversification is the only free lunch available. What do they mean by that? This is what I said, that people appreciate the fact that diversification reduces risk, but they don't appreciate the fact that you can reduce risk without compromising on long-term returns. Because in our minds, we've been taught high risk, high return. Therefore, if I'm reducing risk, I'm naturally reducing return. But the uncorrelated assets, what we've shown through our S&P 500 and Nifty 50 portfolio, or equities and gold, value and quality, shows that you can achieve risk reduction without compromising on return. I think Harry Markowitz won the Nobel Prize for coming up with a modern portfolio theory back in the early 70s. And there's very little appreciation of this fact even today, 50 years hence.
इनफैक्ट आप लोगों ने जो मेरा इस साल का किया राइट मेरा वो फाइनेंशियल प्लानिंग का हर साल डालते हो राइट व्हिच लीड्स टू लॉट ऑफ पीपल गेटिंग वेरी वर्कड अप उसमें आई सेड राइट my domestic piece hadn't worked out for 3 years but my global piece thankfully had worked out and because I've generously allocated to global equities because that fired up overall my returns over the last 3 years have been decent right that's classic diversification you've got two punchy allocations right? You don't, if both fire together, nothing like it, right? So, in thinking of the old Indian Test cricket team, Purana wala, if Virat Kohli and Rohit Sharma scored together, nobody's going to complain. But the merit of having two guys with different strengths in batting was, in different conditions, Rohit Sharma would fire, in different conditions, Virat Kohli would fire, and therefore, by and large, India would end up with a decent test total, right? So, think of your portfolio like that. Our job is to bring that to bear for millions of Indian families through plan.marcellus.in, right? Plan.marcellus.in, right? And that's the beginning of a journey which we hope will be transformative for many of the readers of your publications or the viewers of your TV channels. Any questions, folks? Anybody else?
So I had one question. So how do you go about selecting mutual funds in this PMS? And is it skewed towards active or passive? Because you mentioned passives can be a good thing to.
Pramod, you want to have back?
Yeah, I think in certain categories, India is still not there. Indian market is still quite inefficient. So there is scope for active managers to add value. More so in small cap, which is literally an ocean, right? So picking up stocks is akin to finding a needle in a haystack. So there is value add from a good portfolio manager. In most large cap diversified portfolios, you're perhaps better off with a passive fund where it's becoming harder and harder to beat the index. Having said that, there are differences in points in time of the cycle, which is where the science come to it. Here again, we are utterly conscious that we are also human beings subject to the same emotional thing. We can get swayed by a certain fund manager who's delivered really well. But what Krishnan has created, he's our quant guru that sort of talked about, is a data-driven approach to fund selection as well, right? That way, we are not letting our own biases creep into it. So the selection could result in actives, could result in passives. If we have two choices where the risk return combination for the said client is identical, we would naturally go with the passive because that will pull down your expense ratios. And remember, expense cutting also compounds and adds to your returns in the long run.
That 115 bips number, right? Srishti, I think it was good that you asked it. That 115 bips, right, is the TER currently. We aspire to bring it down. I keep nudging my colleagues to say 1 ke niche, 100 bips ke niche le aao. I think we'll get there. And I think that'll be a massive disruption for HNI India. आपको काउंसलिंग भी मिल रहा है, प्रोडक्ट सिलेक्शन भी मिल रहा है, all for less than 1%. Right? पहुंचेंगे वहां पे. I think a lot of credit to this whole ecosystem that the regulator has constructed. जहाँ पे competition intense है, right? As you guys pointed out, we ourselves will become an MF house. We'll add to the competition in the MF space. So intense competition है. The India stack, right? UPI, the whole MF utility space, right? BSC star और क्या नाम दूसरे का क्या नाम है? जहाँ पे सारे MFs मिल सकते हो. MFU, right? So we can buy direct MFs बहुत easily. We can empanel clients using the India stack. Because of the competition in the MF space, expense ratios, the MFs themselves is coming down. And therefore, the prospect of high quality advice, high quality counseling combined with top class product selection being available at less than 1% becomes, I think, very real.
See, it's the global fund of funds. They are pretty high on expense ratio. Otherwise, it comes to around 50 bips. It theoretically sits down, but it's skewed by just one allocation.
It's a temporary thing because there are very limited options to invest globally because of the mutual fund limit by RBI. Once it opens up, hopefully we'll be able to bring down the expense ratio on that allocation as well.
कर देंगे. Provided the RBI listens to our prayers from people like us and allows us to invest globally, वहां पे we will crash the expense ratio. And ultimately we can be very clever with software and so on, but अगर expense ratio ऊंचा है तो वहीं पे पूरा suck out हो जाता है. The Kumars at Kandivali, then basically their wealth gets sucked out into the expense ratios of our industry. Okay, thank you, folks. Thank you so much. Thank you for turning up today, and hopefully this was useful. Thanks, Thank you for making this happen.
Thank you.
Thank you.